Hello, Fun Fact Friday. Today we are here with Josh Simonds with Primerica, and we are going to go over the importance of life insurance as homeowners. So, first and foremost, welcome. Thank you for coming.
Thank you for having me, Alyssa.
Yes, and more importantly, probably the most basic question, why is it important for homeowners to have life insurance?
Well, the answer to that is that most homeowners have someone that is depending on them. If you're the person that's on the paperwork, you're the person who's responsible for the mortgage, you probably have a wife or children or other people who are dependent on you. If something happens to your income, then that mortgage can't be paid and those people are out of luck. They have to take care of it themselves, and sometimes they can, sometimes they can't, and then the cards fall where they may. So life insurance replaces your income and allows them to continue to pay that mortgage and continues your commitment to taking care of them even after your death if something happens before it's supposed to.
Got it. Okay. And so can a life insurance policy, in the event something does happen to you and you not only have a mortgage but you have other amounts of debts or anything like that, does that life insurance policy help cover those things as well?
Yep, of course. So every person is different, every person has different needs, and depending on people's situation, they need a different amount of coverage. It can cover any outstanding debts, including the mortgage, credit cards, cars, all of that. It's also there to replace your income beyond that, so that if something were to happen to you or a loved one sooner than it's supposed to, now life continues on financially for another decade or so, is the rule of thumb.
Okay.
So that they're going to be okay to pay the mortgage, get rid of all the debt, and have an income still coming in so that they can reset if after a early death.
So you had just mentioned that even when those debts and or that mortgage gets paid off, you continue to still receive monthly income to cover, say, a salary or something?
Yeah.
How do you, or how is it deciphered how much allowance you're receiving monthly? And I know that you just said that coverage could go for a decade or so.
Sure.
How does that get set up?
That is where a professional like me comes in, or me. Specifically. Yeah, so every person is in a different situation, and so how that gets figured out is when I sit down with people, we go through a whole questionnaire, put together a whole plan. It's all about them, what their goals are, where they want to be, what they want to do, and then there's the discussion on the products that help them get there. The base product of that is life insurance, because without an income, all those other goals are dead.
Right.
Along with the person who dies. So as long as that income's there, we're good to go. You can continue on with life. And so to decipher the correct amount of life insurance for you is a process. Takes a little bit of time, an honest discussion, and then we go forth from there and figure out exactly how to get you exactly what you want or need, depending on budgets, depending on lifestyle, depending on what you're after, your goals. If you want all those to be fulfilled if something happens and you're willing to pay a bigger price, or if you have a shorter list of needs that you're going to take care of to fit it in your budget, that all those numbers are put down on paper, put in the system, and we give a free plan to our clients before they become clients to show them exactly what the process looks like.
Okay.
Yeah.
Got it. And then if a homeowner is to refinance their home, do you have to or should you update that life insurance coverage along with the refinance, or does that have any play at all?
So the answer is it depends. It depends on how big of a refinance you did. If you just added $100,000 to your debt and you only had $500,000 in coverage and that already wasn't maybe going to be enough, now you have to think about that. It depends is the answer, because financial planning isn't, hey, I've made a plan, I'm following it, and I'm done. It's just like everything else in life. I made a plan, something changed, now I need to make an adjustment, and then you call your professional.
And what does that adjustment need to look like?
Yeah.
Yeah. So I know that there's two types of life insurance. We've got term and we've got whole life.
Yes.
So how does a homeowner decipher which coverage is best for them?
Yes, so without going into a long diatribe on how that all shakes out, term insurance is less expensive and takes care of what you need it to. A whole life policy is actually a term policy with a separate account attached to it, and that is your investment account. Those accounts do not have the same kind of performance that a more proper investment vehicle has, and the term life insurance inside of the whole life policy is more expensive than just a flat term policy, and it also increases more. They're complicated contracts. They're complicated for a reason. They're not good for the consumer. They're good for the agent selling them. They're good for the company selling them. Term policies are the way to go. That's all we sell at Primerica. We don't have a whole life offering because it's for the 1%. It's for someone who's looking to pay their estate taxes without liquefying things. So if you have more than 5 or 10 million, 10 million for a couple currently, then now you're looking at a whole life policy in your older years, because now you're looking to pay off estate taxes without having to have your family sell your house within 90 days to liquefy assets to pay the taxes on your death. That's the one standalone case for whole life insurance. Almost everybody in the world is not in that boat.
Right.
So we only sell term insurance for estate planning purposes. If you are a high net worth individual and you're getting up there in years, that's when you talk to an estate planner. That's when you have a whole life policy.
Got it.
Everyone else should avoid them entirely.
And so life insurance, or the life insurance policy, is probably the most beneficial, like you said, for the consumer. It's going to help out those dependents. It's going to really work for the family or for the household versus.
Correct.
Okay.
Yep. So the proper way to look at it is that a term insurance policy, a life insurance policy, is like a car insurance policy. If you crash your car, it pays. If you die, it pays your family, right? So that is the reason for life insurance. For what we do at Primerica, we sell life insurance based on the theory of decreasing responsibility, which is buy term, invest the difference. You have a term policy for 30 years, 20 years, whatever the case may be for where you're at. As time goes on, you're gonna have kids that grow out of the house, mortgages that get paid off, debts that get paid down, and cash that's accumulating. So eventually, now instead of having $1 million policy, you're gonna have $1 million or $2 million in the bank towards retirement. That term policy is gonna expire. Now you're self-insured. You don't need the insurance. Now you need good investment advice and great investments to help continue to grow your money or keep it steady while you pull income out of it.
Got it. Understandable. So if we have any questions about what kind of coverage works best for you or your household, I'm going to go ahead and drop his information in the description below. So make sure, if you have questions, are you covered accurately or appropriately, again, for your lifestyle, for the family, whatever it may be that we've discussed. You want to kind of have those questions and make sure that you get a little bit of a rough draft on that paper to see if it all works out for you. So again, I'll make sure that I put Josh's info in the description, and we will see you next time. Thanks, Josh.
Thanks, Alyssa.